Welcome to the video on ISA ASA 210, which is agreeing the terms of audit engagements. Now, if this is your first time to the channel, welcome. My name is Dr. Amanda White. I am a university lecturer in auditing and assurance at the University of Technology, Sydney. And on this channel, you'll find heaps of free auditing information about standards, about concepts, even full lectures. So click subscribe and have a browse around the channel. Now today what we're getting into is ASA 210, which is agreeing the terms of audit engagements. Now this is really important because in any sort of business arrangement, you should have a contract between the two parties, all right, where business is going on. So there needs to be a contract between those two parties. Who are those two parties? Well, in our case, those two parties are the audit firm, so the auditor, which is typically the audit partner, and we've got our audit client. Now, in terms of who would be signing that, that would typically be the audit committee. So between these two parties, we need to have a contract between both of them to regulate those sorts of business dealings. So we have our contract, all right, and the auditor and the audit client need to sign, and that'll govern both of their behaviour. So our contract, when it comes to auditors, are called something very, very specific. And they're actually called engagement letters. That might seem like a strange name for a contract, but our engagement letters are our terms of our contracts between our two parties. So let's get into the actual standard. You know, the basic stuff, and here we'll go through and remember that there's the requirements. So the requirements are always going to be the legally enforceable components, and then later on down here you'll see the explanatory material. In these videos I focus on going over the requirements. Information about compilation, changes to the standard over time, and if we look here, ASA 210, which is the Australian standard that my students will use here in Australia. We're clearly in conformity with ISA 210, which is the same number, the same name. Now there are some sections that have a specific AUS that apply only to Australia and not in international jurisdictions. So let's start with the scope of the standard. So the scope of the standard always tells us about, well, what is this auditing standard about? So it's very clear, it's the responsibilities in the terms of the audit engagement with management and potentially those charged with governance. So remember that contract law says both parties will have responsibilities of things to do, it might be to provide information or to pay money, and this standard covers that scope. Now, if we go into our definitions, sometimes if there's a new term you don't understand, definitions is always the place to look at. There really is only one that we're really going to be looking at, and that reference to management usually refers to management and those charged with governance. So from our perspective, for publicly listed firms, that's usually going to represent the audit committee, but if there's no audit committee, it might represent the board. So let's start with our requirements, and these are our legally enforceable components. All right, so there are some things about the preconditions for the audit. Now, preconditions for the audit are things that we have to have before we can actually give an audit to the client. So there's a couple of different things. What is the financial reporting framework, and is it acceptable? Now you'll see here there's some references to some extra explanatory material. So are they working with a financial reporting framework that we think is appropriate? The second thing is that management acknowledges and understands its responsibility. So that means that management have to know what they are supposed to do under our corporation's regulations. So for example, they're responsible for preparing the financial report. The auditor can't say what goes into the report. We can provide suggestions, but management are the ones who have to decide exactly what goes in. Management are also responsible for designing internal controls, so policies and procedures, and the auditor they have to provide the auditor, management has to provide auditor, access to information, anything else we might request, and unrestricted access to people within the firm so that we can ask our questions. So these are all the things that management have to be sure that they understand is their responsibility. Now, there are some limitations. For example, if particular access to information might not be available, you will actually disclose that before you even sign the contract. So before the auditor can actually do any work, plan anything, we have to have the contract process. So what sort of other things need to go into our contract? So this agreement on the terms is really what are the things that are going to go into my contract. So there are some pretty specific basics. The objective and scope, oops, wrong sort of pen there. So what is the audit all about? Objectives and scope. We clearly list out what the auditor should do and what management should do. What's the reporting framework that we're using? Are we using IFRS? All right, or if we're auditing a US parent, do we have to worry about US GAAP? So we need to know what that financial reporting framework is. And then the final thing, reports. So what sort of audit report are they expecting? Is there something under international reporting we need to be aware of? So those are the main terms of our audit engagement. And on recurring audits, so this is usually the first time you do an audit, a recurring audit is an audit that you do the second or third time. So they have to figure out, do we need to change anything? All right. So if there is a change, then there needs to be some agreements in the contract to that. There are some extra considerations. If you're auditing, for example, a US company, you may have extra requirements by law. But realistically, the key parts were those early paragraphs. Now, in the explanatory material, you'll see there's lots of things here about preconditions and about scope. What I show you in this short summary of ASA 210 is a key feature from Appendix 1. All right, and this is a sample, a common sample of a contract, and we can't start the audit engagement without this. So common things, and most audit firms will be following exactly the same contract, starts with things like to the representative of management or those charged with governance, and there are headings. So these here are actually little headings used in the contract. All right, so that's why they're in those little brackets, but it says, okay, we're having the audit, we say the financial period, we say which company, what we're expecting to look at, income statement, cash flows, notes to the accounts, and we're confirming our acceptance by means of this letter. So this is the contract. Also very clear is that we're looking at reasonable assurance. We're not giving a guarantee in doing this audit. And we're looking to be free from material misstatement, whether due to fraud or error, and we're going to issue our opinion. Now, a key thing here, I'm going to just make my highlighter a little smaller, is that it's not a guarantee. So reasonable assurance is a high level of assurance. It's not a guarantee that we're always going to detect misstatements. So that's a key thing to remember, especially with definitely lots of spotlights on auditors. Now, I mentioned that the auditors have responsibilities. So here are some of the responsibilities. Identify risks of misstatement. obtain audit evidence to provide our opinion. All right. They need to understand the internal controls of the client. And then if we zoom in on the next page, we're also required to communicate any deficiencies or problems in their policies and procedures. We have to evaluate accounting policies. We have to conclude whether management's use of the going concern basis is appropriate. And I've got another video on going concern I'll link in. And then evaluate the overall financial report. Now, there is a key disclaimer here. There's an unavoidable risk that some misstatements may not be detected, even though the audit is planned and performed accordingly, and that's because our audit is not a guarantee. That comes back to that reasonable assurance. So what do management have to be responsible for? All right. So they have responsibility for preparing the financial report, putting together internal controls, access to information, any additional information that we might request, and unrestricted access to people within the firm. Now, if you think that the client can't provide some of these, if you think your client can't provide some of these, then I would be really concerned about whether you would want to take this audit forward. When we get to the very last component, there's some other things about the date of the financial report. So information when that's going to be provided, any information they agree not to provide. And then when you scroll a bit further down, important information about the money, fee arrangements, how much they agree. Most audits are usually some form of fixed fee arrangement with some contingencies in case you find something unusual. But there is certain requirements for fees, and there might be some specifics, wrong pen there, about what sort of audit report we might have to give. Now, in Australia, we also have some specific extra requirements, and those are from the Corporations Act in regards to independence. So here, we say that we're meeting the independence requirements of the Corporations Act. And then the very last, final page is some information about annual general meetings in which people can ask the questions of the auditor and how that we go about doing that. Now, when we go down here, you might notice that there are 2 places to sign. So we know that the audit partner has to sign, and they have to sign with their name, and then somebody on behalf of the company. As I mentioned before, that's quite often someone from the audit committee. If you have any questions about audit engagement letters, then please let me know in the comments. Otherwise, click to subscribe, and I'll see you in the next video.